Scenario planning is one of the best corporate planning models because it lets you toggle between best case, base case, and weak case scenarios and estimate how your company would perform under different assumptions. If you're a business owner looking to plan his finances or an aspiring corporate financial analyst looking to add projects to your portfolio, grab the free template from the description below and let's get started. This is what you'll see when you download this template. Navigate to the practice sheet. Here you will see 3 different scenarios for 4 business drivers. You can add more business drivers as you want. Above it is the assumptions table, which pulls required data based on the selection from our dropdown. And lastly, the income statement is the final output where we can assess the business state under different circumstances. We'll make this model in 3 simple steps. The first one is to create the drop-down menu. For that, click on the empty yellow box, go to the data tab, select data validation, then pick list and manually type in the 3 scenarios separated by a comma. The second step is to fill in the assumption table. We'll use a nested formula for this, where index identifies the return values while match identifies the corresponding row to the drop-down selection. This might sound a little complicated if you're not well versed with Excel, so let me break this down again. Type in equal sign, then index. Now select the range of return values. For revenue growth in 2026, the corresponding range is C13 to C15. Next, type match. For the lookup value, select the drop down and log the value by pressing F4. So when we drag the formula across, it will continue to reference the same cell. After a comma, select the scenario range from B13 to B15. Log this as well. Now type a 0 to make sure only the exact case match is returned. Close the parenthesis and hit enter. You can see the values in the assumption table correspond to the selected case. We'll use the same formula for COGS, SG&A, and tax rate, selecting the return range and scenario range relevant to them, while our lookup value, which is the drop-down cell, will remain the same for each formula. Now, our third and final step is to fill in the income statement like you would normally. Revenue for 2026 would equal to the prior year revenue multiplied by 1 plus the revenue growth rate for 2026. COGS are given as a percentage of revenue, so simply multiply 2026 revenue with 2026 COGS percentage. Gross profit is the subtraction of COGS from revenue. To calculate SG&A, multiply revenue with SG&A percentage. EBIT is equal to the difference between gross profit and SG&A expense. Tax is calculated from EBIT, so multiply EBIT with the tax rate. Finally, net income is equal to EBIT minus the tax expense. Now that we have forecasted the income statement for the first year, go to the topmost formula. In our case, it's COGS because I've already pasted values of revenue to the rest of the years. Now hold Shift and Control, then press down arrow to select the whole column. Next, hold Shift and press right arrow thrice to select the blank columns. At last, press Ctrl R to copy paste the formula across. Or you can skip this whole step and drag the formulas across manually using your mouse. And just like that, your scenario planning model is ready.